Just last week, Apple did something that made tech bloggers and financial analysts drop their jaws. There were no flashy lights, no Tim Cook on stage saying one more thing, and no grand keynote. Instead, a few new budget-friendly products like the iPhone 17e and the MacBook Neo just quietly appeared on the official website. Now, what was your first reaction to that? If you look at the headlines and the discussion threads, people are asking if Apple has finally lost its magic. Is the tech giant actually resorting to a price war? Is the brand we've always known for premium luxury really stooping down to fight the Android crowd for the mid to low end market? Some are even worried that this is a desperate move to stay afloat as the consumer electronics market continues to shrink. However, after digging deeper, it looks like those fears might be totally misplaced. This isn't a desperate crawl toward the bottom. In fact, it looks a lot more like a carefully planned wealth harvest and a bit of financial bullying. In 2026, a year where memory prices are hitting the roof, the fact that Apple is actually cutting prices is a logic that might just give you chills. While everyone is laughing at Apple for losing the AI race, they might actually be the ones sitting back and waiting to collect the spoils of war. Today, we are going to break down how big this game really is and why Apple's price war is actually a setup for a much more aggressive takeover. Before we dive in, just a quick reminder that this is for research and sharing purposes and does not constitute investment advice. Understanding the logic is always more important than the trade itself. Let's look at how strange this product launch actually was. Instead of the traditional spring event, Apple just hit the upload button on their website and followed it up with some local marketing and hands-on experiences. They introduced the iPhone 17e, the second generation of their budget series, which interestingly scrapped the 128 gigabytes version and offered a serious spec boost without raising the price. Meanwhile, the MacBook Neo has officially pushed the entry-level laptop price to an all-time low. In some regions, with local subsidies, you can grab one of these for the equivalent of under $600. The real mystery here is that we aren't exactly living in an era of falling costs. Prices for DRAM and NAND flash are skyrocketing, which means the cost of making phones and laptops is through the roof. Every other manufacturer is complaining because their profit margins are getting squeezed, forcing them to raise their retail prices just to stay in the black. In the business negotiations back in February, Samsung Semiconductor reportedly proposed a 100% price hike for the mobile memory needed for the iPhone 17 series. Usually, Apple would use its massive order volume to bully suppliers into lower prices, but this time they reportedly just accepted the deal. On the surface, it looks like Apple is devaluing its brand, but looking at the competition, this is pure financial bullying. A recent IDC report suggests that due to these memory costs, global smartphone shipments could drop by 13% this year, which is an unprecedented crisis. The hardest hit are the low-end Android devices and mid-range Chinese brands that are being forced to hike prices, but Apple has a deep, hidden reservoir. By cutting their prices now, they are essentially trying to starve out the competitors who don't have the deep pockets to survive the dry spell. With over $54 billion in operating cash flow generated just in the last quarter, Apple has the strongest balance sheet in the game. This isn't a retreat, it's a calculated sweep of the market. Now, why would Apple be so willing to give up profit on hardware? It's because their business model has evolved into something else entirely. You have to start looking at Apple as a software company wearing a hardware coat. The goal of the iPhone 17e and the MacBook Neo isn't to make a few $100 off a device sale. The goal is to widen the mouth of the funnel. Once you buy that cheap iPhone or MacBook, you are officially in the ecosystem. And once you're in, you start paying for iCloud storage, App Store fees, and the upcoming AI subscription services. This is the classic razor and blade model. Apple is giving you the printer for cheap because they know they'll be selling you the ink for the next 10 years. Even top analysts have noted that while rising memory costs will hurt hardware margins, Apple is using this chaos to grab market share. They can afford for their hardware margin to dip slightly from its record highs because their services margin is sitting at a staggering 76.5%. For Apple, the user base is everything. In 2026, which is effectively the first year of the massive AI application explosion, having the most users is the only thing that matters. There's been talk on Wall Street about Apple losing the AI race. We see Microsoft, Google, and Meta spending tens of billions of dollars on NVIDIA chips and massive data centers. Meanwhile, Apple has been relatively quiet, leading people to think they've fallen behind. But this might be their smartest and perhaps most ruthless move yet. While the other tech giants are like tigers fighting in the woods, burning through cash to build the strongest model, Apple is the bird sitting on the branch watching them exhaust themselves. OpenAI is projected to burn $115 billion by 2029. That is an insane amount of money with no guarantee of a massive return. Apple doesn't need to build the world's best model. They just need to own the world's most valuable front door. They have 2 billion of the world's wealthiest, most active users. Plus, they own the most important thing in the AI era, your private data. People are becoming terrified of sending their private conversations to a cloud server, but they trust their iPhone. Apple's strategy is simple. Let the others fight and spend. Once a winner emerges or a model becomes mature, Apple will just plug it into their system. Whether it's GPT or Gemini, if those companies want to reach 2 billion premium users, they have to go through Apple. They might even have to pay Apple for the privilege. Apple avoids the R&D risk and just picks the winners. They might have lost the model race, but they are winning the user race. In the AI era, the person with the model is the worker, but the person with the hardware and the users is the landlord, and Apple is the world's biggest AI landlord. So, is this price war a defensive move or an offensive strike? If you still see Apple as just a hardware company, this dip looks like a struggle. But if you see them as a SaaS giant with 2.5 billion users transitioning into an AI service platform, this dip is actually a massive opportunity. To wrap this up, remember these 3 things. First, their financial bullying is a way to clear out the competition during a high-cost era. Second, cheap hardware is just a trap to get you into their high-profit software ecosystem. And third, Apple's parasite AI strategy lets them take the biggest slice of the pie without the biggest risks. For most people, Apple remains the safest vault in the stock market. You should keep a close eye on their service revenue growth and their upcoming AI partnership details. Do you think Apple is selling budget gear to save themselves, or are they getting ready to take over the entire market? I'd love to hear your thoughts in the comments. If you enjoyed this breakdown, don't forget to hit the like button and subscribe to TradingKey for more deep dives. I'll see you in the next one.